All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, Yeshwant. Much love to you. Glasshopper, good afternoon. Crypto Wander, thank you. Smash the like button, guys, on your way in here. Please hit the like button if you get any sort of insight into the market from this live stream. R Pink and Samuel S44, guys, welcome in. Thank you so much for being here. Thank you for modding. Tony CC, welcome in as well, and TXRX. Guys, thank you for being here. So we are seeing a bit of a slow day, a slow week so far in Bitcoin, but that is to be expected after we saw the dump occur last week, the very aggressive move last week. We are seeing that little bit of a relief bounce from the lows of last week, from that very volatile move that happened on Thursday. And I have to say, if you guys did watch yesterday's video, I think this does look more corrective than impulsive to the upside, and I am expecting an overall new low to be coming in on the charts. But we could continue to range for a couple weeks here, and we could come higher. Of course, we are forming a nice tight little range right now on Bitcoin. Really quite a tight range that might get expanded, but right now this is kind of our price action. We're either going to see a break of those lows or a break of those highs relatively soon. For me, I'm still looking at the possibility of a larger three-wave corrective move where we would expect to come out and take out last Friday's lows here. That would be ideal, to take that liquidity of last Friday's lows and then see another possible move up. But we are at our minimum target for rejection. The highs that we saw on Sunday and the highs that we saw last Friday are at right around that 382 Fibonacci. And you can see here, let me go ahead and hide this swing failure pattern here. We are not able to break the 382 Fibonacci yet. And in a wave 4 corrective move to the upside before seeing one final fifth wave to the downside, that 382 to the 0.5 Fibonacci is where you would expect to reject if Bitcoin is going to reject and roll over and create new lows here. Technically, we have hit those targets. Now, time-wise, we have not hit the target yet. The target, generally a week to 3 weeks, 4 weeks there. We could be ranging for another couple of weeks in here. And this range was about 1 week long. That was our WXY running flat correction that we saw. Three-wave here, three-wave here. And then we had the double zigzag here, three-wave here, making that running flat that lasted 7 days before seeing our big volatile wave 3 to the downside, all the way down to 60K there. With the move up that we're seeing, and with the move up that we're seeing, that wave 4, we want it to last about a week to 3 weeks, 4 weeks here before seeing that possible dump to make new lows. And this is still the highest probability to me, that we are in a wave 4 corrective move before seeing that dump to the downside. If this was going to be an impulsive move to the upside, followed by a retracement, now the bullish scenario is that we are going to see an impulse up from here, but the volume that we're seeing on this move up, you can see overall, volume is decreasing as we are moving up. Volume is overall decreasing, and that is not a good sign. We would want to see some, or if this is going to be a wave 1, we're going to see a flat wave 2 that lasts quite a while, and then a wave 3. We really want to see some volume kicking in on this push to the upside, breaking above that 0.5 Fibonacci, and just really continuing. So we have some targets, of course. I laid out some of those internal targets in yesterday's video. Right now I'm in scalp zone because we don't know how long this range is going to last. We also have internal support levels and resistance levels within this kind of bigger range in here that we can trade until we get that more volatile move that could come here soon. I'm still looking at our point of control. Now that point of control is of your 2024 range. A couple years ago, that range that was a couple years ago, that old range. And anytime you lose your upper range, so we were in this upper range in 2025. For most of 2025, we were trading within this upper range. Well, we lost it and closed a weekly candle below the, not only the value area low of the range, but we closed it below the lows of the range. So let me just go ahead and throw on that range real quick, and we can look at this. You can see that really once you started to lose that, you got one last little bounce, and then you lost it with volume. That's when the volume increased to the downside. We really saw a dumpage out of this range, meaning that the market was trying to price in a lower fair value for Bitcoin. It no longer qualified the fair value for Bitcoin between the prices of $110,000 and $85,000 or $86,000. And so the market's repricing Bitcoin. When that happens, when you lose a range like this with volume, you will often drop back into your prior balance. This was our last balance of fair value for Bitcoin was in this range here in 2024. And so now that the market is more bearish on risk on assets with uncertainty in the market, it's repricing in, and now we're dropping back and we're reestablishing fair value for Bitcoin within the 2024 fair value. We dropped to the bottom. We bounced directly from the value area low of that range, which would be considered undervalued in 2024 at $60,000. Bitcoin was undervalued in 2024, which will be a level where people will be interested in buying. And remember, in 2024, the institutions were buying, and the spot ETFs, the big guys, were buying towards the value area low of this range a lot in 2024. So, of course, anytime we were below the value area low or around the value area low, we were seeing massive buying of Bitcoin from big institutions. They are going to try to defend their positions overall. And that is why we did see some nice support coming in here. We got the bounce up, and our daily candle body closed pretty much at the POC of that range, which is considered fair value in 2024. So we saw some wickage past it, saw some buyers stepping in, and closed the daily candle at fair value. And of course, we are just chopping around the value area high right now. If you look here, the value area high of that 2024 range is pretty much $70,000. And we're finding some resistance here at 70,000. Let me just mark this out. I think I actually already have it marked out. Maybe not. All right, let's just mark that out right there. That is your previous range value area high. And if we look here, the daily candles are really trying to close above that value area high, but not really getting any significant closes above that value area high. So what that tells me is that Bitcoin is reestablishing price action back within the 2024 fair value. It is now saying, okay, we're repricing that fair value back to the levels of 2024. And anytime you see that happen, there tends to be a range that occurs for quite some time where the market is reevaluating and kind of repositioning themselves for a bigger move for Bitcoin, whether it's going to be a dump out of this range to continue even lower in bear market pricing, or if it's going to push back up out of this range and start to retest the fair value for our previous range around $86,000. So that's going to be a big move that's coming in the next couple of weeks. Generally, the market will make that move after some time of resetting. And I really don't think, if we are even going to get a push up, say we're going to make another confirmation of the bear market, and a way that would be confirmed is if we did finish this overall larger impulse down, wave 1, wave 2, 3, 4, and then say our fifth wave goes all the way to $57,000. We get a bounce from $57,000 and we see a nice big move all the way up to $86,000, or even potentially to the point of control of that range around $96,000. That would be our big test to see whether a bear market, because if we bounce from 57,000, we come up to $86,000 and we reject that, you are going to expect to probably make new macro lows. Now, it won't happen right away, but that would in some ways be confirming a bear market for us. It would also be a 5-wave impulse down, followed by a potential 3-wave corrective move up, and then you'd be expecting another macro low on the charts. For now, we are just looking at still this 5th wave of the impulse to the downside. This is an extended 5th wave, and especially in flat corrections, these bigger flat corrections, you will get within your C wave, you will get some pretty volatile price action to the downside, ending on a high amount in volume on the macro time frame. So, but we did have a high amount of volume on this low at $60,000, but within the Elliott wave structure of this bigger move, we still looks like within this 5th wave, this extended 5th wave, we still do need one more macro low on the charts to complete a valid 5-wave count in this impulsive price action. And I do have to say, the way that we dumped down here with such a big increase in volume, with losing and closing weekly candles below the value area low of our 2025 range, it is highly, highly probable that this is impulsive price action to the downside, meaning that we need a finished impulse to look for a bigger bounce to the upside. So that is what we're waiting for. We're waiting for another low to be coming in on the charts. And then that low could be a very big macro low where we could get a massive, $10,000, $20,000 rally to the upside. But until then, we just trade within the small range that we're given, within what the markets are giving us up as opportunity for the day, for the week. And right now, we are just consolidating and kind of resetting after that big move, still trading within our 2024 range. So let me just do this. I'm going to bring this. This is going to be for 2024 value area high, and we will put this right there. All right. So yeah, not a whole lot to cover here, guys. We are still now, if you watched yesterday's video, I covered some of the low time frame price action. But before I cover that low, like the channels that we're in, we have 2 channels right now that I'm watching, and I will cover that in just a second. But before I cover that, I want to talk about something that I forgot to show you guys in yesterday's video. And I'm just going to hide some of this stuff on the chart real quick. We're going to hide those volume levels. I'm going to hide this swing failure pattern level. And I want to zoom out onto the daily chart. And we're going to look at our bearish structure on the daily chart from the all-time highs. We have a pretty big bearish structure, bearish money market structure here, making macro lower lows and lower highs. But this upper range, is what was really important for us to focus on until pretty much last week. And in some ways, it is still very important for us to focus on this range. So if we look at the key swing highs and swing lows of that range, then we can get a trend, potentially our bearish trend, right, from these levels here. So if we pull that bearish pitchfork and we look at that bearish pitchfork, trying to measure the bearish outcome where we could see some big bounces or big lows, you do also see that dump on Thursday, that daily candle closed. I'm going to hide this here. I'm going to get rid of some of this so you can see that better. Our daily candle closed exactly at the bottom of the pitchfork. And we bounced come Friday to backtest that lower band. And you can see we are having a lot of trouble getting back within that lower band, getting at least established inside of here and forming a higher range inside of here. We are having trouble. So if we do bounce from the bottom, wicked below it, but closed the daily candle at the bottom, held it as support, oftentimes you will see this kind of grindy price action that happens between the low of the pitchfork and the bottom band, or even the upper part of the bottom band. But something like this that will occur and could take weeks of consolidation here before overall deciding to see that last move down, or to see a break up and a flip of this pitchfork band. We really want to start to flip this pitchfork band to support. And if we can, we do have some pretty nice opportunity to shoot back up to kind of back test our previous lows in here. Kind of those value area low and previous lows around $85,000 to $80,000. And we'll just have to see what happens. We're in wait mode. We're in wait and see mode. We're in scalping mode here. I do like this bottom, how this candle did close exactly at the bottom of this pitchfork. That means that this structure is still valid. This trend is still valid, and it's still at least trying to hold somewhat. And the fact that we are rejecting and not able to close a daily candle inside of our pitchfork band means that that's going to be our kind of key resistance right now locally. So you can see here, even on the 4-hour, kind of rejecting that pitchfork band, rejecting that pitchfork band in here. And now we can zoom in on the lower time frames. I covered this a little bit in yesterday's video, but we have this high that was created on Friday from our potential impulsive move that happened in here. And then we saw a 3-wave corrective move down. So with that 3-wave corrective move down, bouncing from your anchored VWAP, pulled from those crash lows, we came up and we grabbed the liquidity. We grabbed the liquidity of Friday's high. Now, this high, though, happened on a weekend. Be very aware of that. That is a Sunday high, a weekend high. You can see Sunday, February 8th, 1600 my time. Now, once we did that, we did have some key liquidity. You can see this is our 1 week heat map. We had liquidity that was resting up above those Friday highs, right up there. So we came up on Sunday on the weekend. We grabbed a majority, not all of it, but a majority of that liquidity, and then made another move down. Now, yesterday on Monday, we bounced again. This was the bottom of our ascending channel and our anchored VWAP. So let me turn on that ascending channel. Actually, it wasn't the bottom of the ascending channel. Sorry, today's low was. But it was your anchored VWAP. So we saw a small bounce up yesterday, made a lower high again, rejecting from that golden pocket area and the pitchfork band. If you just throw this move on here, let's do that, and you'll throw on your golden pocket. You can see it was your golden pocket area. It was your pitchfork band of resistance locally, and we rejected, and then we came down and made new lows today. Now, not new lows of this entire range, but new lows from yesterday's low. And that was important because if you look at our liquidation heat map and we go back here, look at the liquidity. Let me just zoom in here. You can see that there was from yesterday's low, which was this low right here, it left some liquidity. We had some people long yesterday's low, and of course their stops are going to be placed below that low, creating this pool of liquidity right here that was resting there. So the market makers came up and they took out our local liquidity to the upside. With yesterday's low, we had created some local liquidity to the downside, and today we dropped down to grab that liquidity. You can see we had that liquidity grab earlier this morning, grabbed the liquidity from yesterday's low, stopped out that liquidity that was just below us, also bounced from the bottom of our micro trend. This ascending channel here is our micro trend that we're trading in right now. Almost a flat, it's almost a horizontal range, but slightly tilted with slightly higher highs and higher lows on here. So bounce from the bottom, grab the liquidity, bounce from the bottom of the channel. We're making another move up here, but overall, just right before the stream started, we started dumping again here, guys. And if we do start to lose this channel, I do think we might see a bigger drop, potentially all the way back down to the bottom of the pitchfork again. We're just going to have to see how this plays out. Now, we have this smaller channel, but I also want to turn on our old channel. Let me hide this ascending channel really quickly, and we're going to go into last Thursday and last week, Monday, Saturday, Sunday, Monday, Tuesday, we started to form, we had a big aggressive drop, and then we started kind of going sideways in here. Sideways. We could have had a 3 drives pattern, but it failed. But we created kind of this descending channel structure that was happening towards the end of the move. You can see low, another low, and then your highs here. So we had this descending channel structure. We broke it to the downside on Thursday with the volatility, back tested it, and upon the bearish back test, upon rejecting from the bearish back test of that channel after losing that trend, that is when your giant waterfall came into the downside. Now, we bounced, of course, from those previous value area low, from the 2024 value area low. We bounced from the bottom of the pitchfork, and it was also the point of control of that 2024 range. And look what happened on Friday. We attempted to break back inside the channel, kind of chopped around, trying to hold back inside the channel. We couldn't, so we lost it throughout the weekend. We lost it, and then we spent all day Saturday trying to get back inside of it. All day Saturday, just slowly grinding, trying to get back inside of it. And then sure enough, Sunday comes and you pop in through it. You pop back into it, and you can see you pop back into it with 2 nice little volume candles to the upside. And so now, in some ways, we're reestablishing price action back within your old trend. This trend is still continuing, and it is a bearish trend, but the weakness, the selling pressure is now starting to get exhausted, with the exception of the capitulation that happened on Thursday, of course. We can now look at this as a deviation of that trend, that descending channel trend. That deviation happened because of some fear and uncertainty in the markets and capitulation, quite frankly, and some liquidation cascades. So now that we're back inside this channel, you can see we rejected from the midline 1, 2, 3, 4 times, rejected from the midline. We came back down and we back tested the bottom of the channel. That was yesterday as well, guys. Came back down, back tested the anchored VWAP, back tested the bottom of the channel, and then we made a rise up to hit that, once again, lower high golden pocket. your pitchfork band was there, and your midline was right around there. So a lot of internal resistances and support levels being hit, but we do have some trending structures we can be looking at for levels, for small bounces, for scalp trades. And after rejecting from that golden pocket and that pitchfork band, we are dropping. We took the liquidity like I just covered, and now we made a little rise up to try to break that midline, and we're so far kind of rejecting from that midline right now today, currently right now, rejecting from the midline. If we throw on both our channels at the same time, we really need to, if we dump out of this ascending channel, let me make this one blue here. So we'll go with this blue ascending channel. If we start to break this to the downside, there is a possibility of seeing a fake out of a breakdown where you do break down, come to the bottom of your pink descending channel, this channel in here, grabbing the liquidity from those Friday lows into the bottom of that channel. And then we would want to see a re-entry back within your ascending channel. Now, if that happens, we might be able to see a move up, and you could even move up to, you know, the top of the blue channel, which could be in confluence with the upper part of the pitchfork band. So there's a lot of little levels to be looking at here, little intraday scalp levels to be looking at. But overall, our trend is kind of sideways and rangy. And when the trend is sideways and rangy like this, you really want to be focusing on two major things. You want to be focusing on volume levels. Actually, I'll say three major things. You want to be focusing on volume levels. You want to be focusing on key liquidity within that range, highs and lows of the range, you know, key liquidity, and the trend, whatever your micro trend is. So that would be these channels, the, you know, kind of support levels within your micro trends. Because if the trend is going to continue in this rangy type motion, then oftentimes you'll see those trends act as support, as it did earlier to, you know, as it did yesterday here, as it did earlier today here. Overall, we're stuck in between the bottom of the pitchfork and that lower pitchfork band. And this could turn into a bigger range. Or we could come up one more time to finish grabbing that liquidity. You can see there's still a little bit of that liquidity that was left up there from that high that was created on Friday. And then I guess, you know, we did get some new liquidity that developed from people who shorted that swing failure pattern of the range high on Sunday. So we do have a little bit of liquidity resting up there. Let's zoom out now really quickly while we're on the heat map, and we're going to look at the last year of price action. So we're going to look at that range for 2025. And this range for 2025, there was one thing that I was pointing out to you guys for quite some time. It was the liquidity. And let me go to the Model 2. I think it was on the Model 2. There was a lot of liquidity that was resting around 68K. You could see here, 69, 70K. And it was quite a significant chunk, $300 million of liquidations below our 74K lows into that golden pocket. And with yesterday's dump, we finally grabbed the biggest level of liquidity really within, you know, a significant range for Bitcoin. And now all that liquidity's been stopped out, but you can see that pile, that resistance there, that liquidity wall that was there is now acting as a resistance in some ways as well. Trying to, once you grab the liquidity, it's gone, like it's there, it's been taken. But we do have, you know, just the resistance right now. The resistance is acting as a wall for us we need to break above it. Now, in this wave 4, let's go back to the Elliott waves real quick, and then I'll check the chat in just a second here, guys. I just want to cover this really quickly here. Within our dump to the downside, we're focusing on our 5th wave, this extended 5th wave that we could be seeing. And we have our 1, 2, 3. We could be in the 4 now before seeing the 5. Actually, it looks like the 3 is done. With this low that happened and with the $10,000 move we saw to the upside, hitting the 382, it does look like our 3rd wave is in. And so if we're looking at that 4th wave, where does that 4th wave generally end? Well, we know it's between the 382 and the 0.5 Fibonacci. Could we see this wave 4 be a more complex corrective structure that goes on for quite some time, and we see a rise that lasts quite a while and comes up to backtest that $75,000 level before ultimately seeing your last and final 5th wave drop to the downside and take out your lows? So that's what I'm going to be focusing on. That's still my primary scenario. is that we're in a larger drop from the all-time high. From the all-time high, we're in a larger impulse to the downside. Right, wave 1, wave 2, wave 3, 4, and we're in the 5th wave, so we're focused towards the end of our bigger daily impulse to the downside. But within that bigger daily impulse to the downside, we still need another low as far as the actual market structure is concerned with the Elliott waves. We still need another low on the charts to look for more macro swing longs, in my opinion. And that is why I will be focusing on also looking for shorts. If you guys didn't get into the short on Sunday, I mean, that was a really good short. The swing failure pattern of Friday's highs on that Sunday grab there, that would, if you're in that short, I would honestly plan on keeping that open, because you could drop from here. This could have been it. This could have been the 3-wave corrective move. And now we're about to drop here. And if that was the 3-wave corrective move, let's zoom in here on the 1-hour chart. First of all, it's very short in time. You did hit your price target, your minimum price target being that 382, but it's very short in time compared to your wave 2. So it's likely that this range is going to continue, but let's just play devil's advocate here and say this was it. This was your 3-wave corrective move, and now we're about to roll over. Well, because we're seeing a bunch of overlap within this little structure here, we would have to start counting these as 1-2s, because if this is your 3-wave corrective move, now you're going to start expecting impulsive price action to the downside, right? Some 1-2s in here, a big 3, and then some 4-5s, 4-5s. So if that's the case, then we would have to say 1-2, 1, internal 2, or internal 1, internal 2, and then we would want to see some dumpage come in here relatively quickly, maybe ending your 3rd wave at this $63,000 support, and then we would want to see some 4s and 5s come in here towards the end. And so you'd have your choppiness towards the beginning, you could have your choppiness towards the end, get that 5th wave ending, and then you could see a bigger move up. That scenario is as far as the low time frame goes, I don't think this wave 4 corrective move is done yet. I think that this is too shallow in time for it to be done, and we're going to impulse down right now to make new lows. I don't think that's the highest probability. The highest probability for me is that this range is going to continue, and the way this is going now, it looks like it's going to continue for quite some days here until we can get a new high on the chart, seeing that nicer 3-wave corrective move. But locally, we might take out those Friday lows at 63 point. What was that? 67.3? No, yeah, 67.3. We might take out those lows first before getting that push up, seeing that 3-wave corrective move. All right, let me check the chat here. Welcome in, everybody. Thank you all so much for being here. Dark Speed, welcome in. And Lil Rich 69, C Train, guys, thank you so much for being here. D Crypto, Liam DJ 11. Perfect timing for us in the UK. Awesome, Liam. Well, I'm happy that this works out for you. S-Bads, welcome in. And Machi HK, this move up looks very wave 4-ish. I agree 100%, Machi HK. I think that this is a corrective move to the upside before coming down and taking out new lows. The question is this corrective move done like I just covered? Is it done and we're about to impulse down? Or is it still ongoing where, yeah, sure, we can make a new low locally, taking out those Friday lows, but we would also be then looking for new highs within the local range, taking out the weekend highs. And guys, these are weekend highs. We have to keep that in mind. When it's a weekend high, it is more likely to be taken out. But yes, I agree. Wave 4-ish for sure. Please like the stream, guys. Please share the video with anyone you might think finds it interesting. Really quickly here, I do want to take a second to shout out the partners of the channel. I just want to get this done right now, and then we can go into some of the altcoins. We can go into Bitcoin dominance. I want to show you guys some gold opportunities. We might get a nice short on gold. But real quickly here, the main partners of the channel, main partner is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to join. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees and actually earn up to 40% discounts on trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade within those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you can get a 50% deposit bonus. And then, 20% deposit bonuses up to $1,000, and up to $20,000, you can get 10% deposit bonuses. So really, really good incentives for you guys to try out the platform. I've also partnered with BYDFI to create that Telegram community where I do keep you guys updated on my thoughts on Bitcoin and some of the altcoins throughout the day. I try to let you guys know when I enter a long or a short trade. I actually did enter a long trade earlier today on Say. We can cover that in just a bit. And you can ask me questions in the general chat there. If you tag me and ask me questions in the general chat. So that Telegram community is a private community. It is free. All you need to do to sign up is join BYDFI using my affiliate link and then deposit $100. That $100 is your money to trade with. You will get the 20% discounts on trading fees, and you can get the 50% deposit bonus if you do KYC. Now, once you've signed up and deposited the $100 into the exchange, you go to the Telegram link in the description of this video. Click that Telegram link, and once you're in that Telegram Verify channel, you're going to type in /verify and then your BYDFI user ID, which will be right up here. It's probably going to be a string of letters and numbers for you guys. But /verify in your user ID, you'll be into the Telegram, and once you're in, you are in. Okay, next partner of the channel is going to be NAMI Trading. And NAMI is this lower indicator down here. It's a momentum and money flow indicator that I use for my confirmations on my trades to enter and exit trades. So as we're coming up, a good example of that, let's go to the 2-hour chart here. A good example of that is, as you saw that liquidity grab on Sunday, you confirmed bearish divergences on the chart. You can see NAMI was printing the bearish divergences, showing you the bearish signals confirmed, showing you the bearish money flow. So if you were up and awake or looking at the charts at that time, wherever you're at in the world, NAMI gave you not only with the confirmed swing failure pattern, which would have been good enough alone, but also with the confirmations on the indicator, it gave you a better, more confidence to take the trade, knowing that it could be a winning scalp trade. So NAMI, I partnered with NAMI to get you guys 50% off. So if you're interested in purchasing NAMI, use the affiliate link in the description and then use discount code DIVINE50 in the promotion box, and you guys can get 50% off of that. Lastly, we have MEXC and Bybit, both great exchanges that I've used in the past. MEXC, I'm still currently using. Bybit is offering up to $30,000 in futures trading bonuses and some discounts on trading fees. And MEXC is offering a 10% initial deposit bonus up to $1,000. Okay, let me check the chat here, and then we'll get into some of this altcoins and gold and some other things here. ABEC9B, welcome in, man. I am now looking at 54 to 47K for the final leg down. Yeah, we could break 57K. The thing is, Machi HK, I don't really want to break 57K, but if we could, absolutely. The reason why 57K is so important is because, at least on Coinbase, it is your anchored VWAP from the bear market lows. So if we're going to see a macro, we want to see a bounce from this VWAP. It has not been tested yet. The entire bull market, actually, it was right at the beginning of the bull market, it was tested. But since then, it has not been tested. Now, anytime you see a major crash in Bitcoin or in an asset and you come test the macro volume trend support, that's what an anchored VWAP is. It's the volume weighted average price, but it's based from a certain anchor point. So we're basing it based off of our bullish trend, our bull market. So if we break and start to close weekly candles below this anchored VWAP here, that is going to be very bad sign for Bitcoin. Because remember, once we lost the 74K anchored VWAP, that was, it's going to be a repeat of what happened here. Actually, I'll show you this real quick. This is a good example. So let me hide this pitchfork here real quick. And I want to throw on an anchored VWAP from 74K because this was a major low within 2025. It was a major low. And we bounced from that low, and then look at the trend was up to make new all-time highs. A multi-$1,000 trend, you know what was that? $30,000 to the upside or something like that. Let's see. Yeah, it was you know, $50,000, a 50,000 push up, $50,001 push up. But within the year of 2025, within the smaller trend, that anchored VWAP was important support. And this was our trend, our bullish trend. Higher highs, higher lows, higher highs, higher lows, higher highs. Once you break that trend, once you break that anchored volume weighted average price based off the trend, right? Our bullish, our local bullish trend in this case. Once you break it to the downside, that is when you'll generally bounce from a local support level. And then that bearish backtest right there, if you come up to it and reject bearishly, that's when you see volatility continue to the downside. So we could be looking at this now. This anchored VWAP is our even bigger trend support, right? Based off of volume. It's our whole bull market trend support based off of volume. If we start to lose that anchored VWAP to the downside, you are looking for now a bearish backtest. And if you bearishly backtest and reject there, you expect more massive volatility to the downside. And so we do not want to lose this anchored VWAP. We really want this anchored VWAP to hold. Yes, a little bit of a wick below it on like a weekly candle, but the weekly candle body closes at or above it would be perfectly acceptable. But we do not want to close weekly candles below it, or even I would say even closing daily candles below it would get really concerning for me. So no daily candle body closes below that level. That's why I think we really want to see 57K hold. Not to mention 57K is some major pitchfork support. If you look at this pitchfork that was super, super highly respected, let me just get rid of some of this here. That pitchfork that was super highly respected, you can see that the midline, we rejected pretty much from the top of the pitchfork, bounced from the upper band, rejected the top of the pitchfork again, bounced from the band, the upper band. But once you lost it, now you expect to come down to your next major pitchfork support level, which is going to be around $57,000. What was acting as resistance in 2024 here was flipped into support in 2025. And now that we've lost it, you're going to fall to your next major pitchfork level, which is that $57,000 level. So 57, 58,000. We have the naked monthly point of control at 58K. It's a little bit of a range there, but a little bit of a zone. 50, I would say from 58 to 56 and a half, where that 1.236 is really a good level to be looking for macro support. But yes, we could drop a lot more. I mean, we could come take out those 49K lows. You're right, Watch HK. We could. Time Attack, welcome in, man. Thank you so much for being here. And thank you for modding for me. Yeah, please hit the like button, guys. If you get any sort of insight into the market here, please hit the like button. 34K is possible in DXR. I do agree. If we're going to see like a traditional bear market, you know, the bear market in 2021 was pretty aggressive. And if we're going to see a traditional bear market, we could see a drop all the way to your macro point, golden pocket. So if we pull that golden pocket from the bear market lows all the way to your all-time high, and we look at our golden pocket, but we base it off of the log scale, because that is more than a 100% move to the upside, 34K, it is not only the most, first of all, if you lose the pitchfork midline, what do you expect? You expect to drop to your next major pitchfork support. So if we come down here, we chop in here for a bit, maybe make a lower high, like test that anchored VWAP, reject from that anchored VWAP, and then start to lose this midline, you would expect to come down pretty much to the lower band of the pitchfork. Now that's where your macro golden pocket is, but it's also the most important support resistance flip in Bitcoin's history, in my opinion. You can see it was acting as support through all of 2020, 2019, 2018. And then at the beginning of the bull market, it was acting as resistance. And once you break above it, you start to see some nice push to the upside. But that anchored VWAP is going to be an important level. And showing you guys what happened at 74K was important, because it was once we had our mini trend in here, it was our mini bullish trend. Once you lost it and then you back tested it, that right there, by the way, we shorted this. We were looking for the short there. That's why you can see that resistance box is still up there. That was when the big volatility came in. So we do not, if we lose this anchored VWAP, it is not going to be good for Bitcoin. we could see some major continuation to the downside. ZMX, what's up, man? Welcome in. A certain soundboard to hype up the chat. That would be pretty cool. Okay. Yeah, and Rping, thank you so much for posting those links for me. Guys, Rping posted the BYDFI link, the Telegram link, and the NAMI link, MEXC link in the description. So thank you so much for that, Rping. I really appreciate you. Yeah, I do know you want more downside, Mach HK, and I'm open to it. You know, more downside just means more of a better spot buying opportunity. The scary thing is, guys, that the S&P is still near all-time highs, overall still near all-time highs. And if the S&P really sees this collapse, once again, going back to July, we have seen some massive bearish divergences developing here. Look at these massive bearish divergences developing, multiple drives of it on the chart. Money flows draining out of the asset as we're creating those bear divs. This could get really bad. This thing could see a nuke. And if it nukes, then Bitcoin is going to nuke as well. So that's when the 34K price targets could come into play. CD Dingle, what's up, man? Welcome in. Limitless 1618, welcome in. Thank you so much, Limitless. First time here, we'll welcome in. And thank you for joining the community. I hope you like what you hear and see. And I hope you stick around. Bot Keto, you're welcome for the TA, man. Always, always, always. And John Shanks, good afternoon to you. All right, guys. So I've never had Darkspeed 19. I've never had problems with MEXC, not taking out funds, not putting in funds. Now, I don't trade the super low liquidity altcoins that some people do like to trade on MEXC. So I've never had to deal with that because I generally don't trade those types of coins. I have heard people that have had some problems with, like, if say they make, you know, turn $1,000 into $1 million from a very low liquidity altcoin. But those are only rumors that I've heard on X pretty much. I have never had a problem with them personally. Okay, really quickly here, I want to cover gold. I think we could have a good shorting opportunity on gold. By the way, guys, I was telling you at 5,500, I took profit on a long position on gold at 5,500 and I shorted it at 5,500. I just took profit way too early. I took profit at the bottom of the pitchfork band at 5,200. So, but gold was seeing that rally. We came all the way up to, let me just hide this for a second. We came up to like the 2.618 Fibonacci extinction and wick past it a little bit, hit the top of the pitchfork band. But our pitchfork, this move was super, super bullish here. And now that we're seeing some break in market structure locally on gold, we could see a nice three-wave corrective move down. So we saw our first low time frame break. We're seeing a little bit of a rise here. We might see another low coming in where we see a three-wave corrective move before continuing the overall trend on gold, potentially up to like 7K or so. So if we're looking now, we can zoom in on gold and we can look at, let's just do the 3-hour chart. You can see that this first dump was pretty impulsive here. This first dump to the downside, pretty impulsive dump to the downside. Now, I don't like how it does look like, if we're being honest with ourselves, we can try to force a 5-wave count in there, but it's not the cleanest. You would have to look at this more as a 3-wave corrective move in here. So are we going to see a WXY correction? A 3-wave corrective move here. We would get a 3-wave corrective move here, and then we could get another 3-wave corrective move here, creating your overall larger 3-wave corrective move before continuing up. But because this first move down was a corrective move, we might be looking at a more complex correction in here, but we would expect to take the all-time highs eventually again. We're expecting new highs because that first move down was a 3-wave corrective move. So if we're looking at that, you can see I have I just marked out the golden pocket there. If you pull the golden pocket from the highs, oops, I'll fix that. Pull it from the highs to the lows, you can see that golden pocket's coming in around 5,100 to 5,144. Well, that is also the backtest of your 2.618 main Fibonacci extinction target. And I believe there was, let's see, was there? That's where that order block is going to pretty much be filled too. You can see this, we had an order block in here, or excuse me, a fair value gap. The fair value gap was where that wick ended, and then it was down to the end of the candle body. Now, of course, with the past few days, we've filled in a lot of that gap, but it would be completely filled pretty much when you hit that wick, this wick right here. So that would be right into the golden pocket. You'd be filling that fair value gap that was created on that first big or second big daily red candle there. So there is, and of course, where do you expect to reject on a lower high is your golden pocket. So if we are going to see that larger three-wave corrective move, you get your dump down, you break market structure, you broke multiple internal lows in here, broke market structure bearishly, get a three-wave move up to that golden pocket. If we reject here, or even maybe a little bit higher, coming up to hit the pitchfork band again, the bottom of it, you could see a wick past it, but a daily candle close at that golden pocket. Then we could see another bigger dump, potentially to come down to 4,100, where that pitchfork midline is. And so I'm looking at potentially shorting. You can see I have an alert set on this golden pocket area, because if we do come up there with bear divs, I will be looking to short this to at least break our lows, but potentially I'll come all the way. I'll hold some of it open to like $4,100. And you can trade gold on BYDFI, guys. XAU, USDT. You can trade gold on BYDFI. All right, gosh, there was something else I was going to cover here. Total market cap. I want to go into the total market cap. Now, on the total market cap, guys, it was when we lost, and I talked about this a lot last week, so I'm sorry if this is review for some of you guys, but we had been in our pitchfork structure, this bigger trending structure, for half of 2024 and pretty much all of 2025. And the major highs in 2025 were at the top of the pitchfork, or at major pitchfork resistances in here. And we, for the first time, lost that trend last week. We started to lose it 2 weeks ago. We started chopping below it, struggling to get back in. And on this rejection here, if you go back and watch the video that day, I made a video that day. I believe it was a Wednesday or a Monday. It was a Wednesday. I made a video. If you go back and watch my video on that Wednesday, what was that? The 28th of January, I was warning about, because we had lost it and started closing weekly candles below it, it was holding the past 2.5 months as support, but now is turning into local resistance. We could see that big flush down to some major support levels. Now, unfortunately, with the capitulation that happened, and this often does happen when you lose a major trending structure like this, you often will see a big violent flush down. If you reject on a bearish backtest, you'll see a big violent flush down, and we did. We flushed through that big support level that I was looking at, being a weekly level, the 1.618 Fibonacci expansion target, and it was extinction target, excuse me, and it was a daily level. So we had a lot of support, and then of course you had your lows generally in that area as well. So we lost it, but now here's a key thing, guys. That now we have to say that is our bigger wave three, or our big three within our fifth wave. So very similar to Bitcoin on the daily time frame. Wave 1, wave 2, wave 3, wave 4, and we're in an extended fifth wave that could be the low before seeing a major rally to the upside. But within the fifth wave, within the extended fifth wave, we still don't have our full impulsive structure complete yet. Once again, very similar to Bitcoin. A wave 1 here, that running flat in a wave 2. All of this was your big push down in a wave 3, and we're seeing a wave 4 retracement right now before seeing a potential fifth wave in here. What's key about this retracement is this level was a pretty big level of support, and we sliced right through it. And now it's acting as resistance. You can see that old daily level, that old weekly level is acting as resistance, but also it is around your prior lows. And we are trying to hold on. We're above those prior lows, and we're trying to hold them locally as support. But if you start to break below these lows and if we see another rejection here and start to close daily candles below those lows, it is likely we're going to come put in another low on the chart, meaning the total crypto market, altcoins, Bitcoin, all of it is going to continue to dump to the downside. So it is not good to see this. And then if we look at now that we had two ranges, we had our upper range, for 2025. We had our lower range for 2024. But now that we're kind of reestablishing back inside of our 2024 range, you can take your volume profile and you can combine the ranges to one bigger range. Once you do that, you can see that you are still significantly below the value area low of that range. And if you just keep, even after seeing a wave 5, if we come up and reject that value area low, that is where things can get really bad. And then I would be expecting to take out your 2024 range lows, which is pretty much Bitcoin equal to 49K. That's if you look at Bitcoin's chart, that's the 49K target for Bitcoin right here, those 2024 range lows. All right, let me check the chat here. Thanks, enjoying it so far. Well, awesome, Limitless. I'm glad you're enjoying it, and thank you for being here. I think all things will drop. Yeah, Darksby, it looks like, I mean, we saw blow off tops on gold and silver. We saw the S&P is, you know, just S&P's the S&P, right? It's generally always up and to the right, but this, you can see how this is now starting to curve. It was very, very straight up. And now that parabola is starting to weaken more and more and more and more. And it looks like it could be about to roll over. It's starting to get that curve to it, like a parabola that is, you know, ending. And this type of price action you see towards the end here is buying exhaustion. So strong buyers in here, strong momentum, strong momentum, strong momentum. Now the momentum starts to weaken. It's still bullish momentum, but it's starting to weaken, starting to weaken, starting to weaken. And if you see that structure break, that is when you could see, you'd want to see that ascending channel, pretty much this pitchfork band. You would want to see a break of it, like a significant break, maybe take out some liquidity, and then see a rise back up to back test it. That is when you could see a big, big drop on the S&P. And the bear divs that have been forming, highly aggressive bear divs, highly aggressive money flow bear divs as well, you would see that, man, we would get a significant dump. Machi HK, you still can't download BYDFI? I did send you, I think I put it in my Telegram. I talked to Alan, who is my rep there, and I did send you the, he sent me something for that. So let me see here. Let me just see if I can grab this real quick for you, Machi HK. BYDFI download link. Okay. Are you on Telegram, Machi HK? If you are, I will send you this, or I can. Let's see here. Yeah, I'll try to get that to you there, but he did say there is a way for you to download it for the UK. Okay, US 30 hit new all-time high today. Okay, wow. So stocks are still remaining pretty bullish, guys. Stocks, gold is still, I mean, gold is obviously taken somewhat of a dump, but it's definitely not the crypto market right now. The crypto market's the market that seems to be dumping the most. US 30. Let's go here. Wow. Yeah. I mean, look at that. And I would say the momentum, unlike the S&P, the momentum is still pretty strong here, guys. But you do see significant bear divs that are forming. Money flow draining out here. If I was a long-term spot investor in some of these, you know, and I hold some spot S&P. Now, I wouldn't say long-term. It's, you know, been 5 years or so. But I would start taking some profits once I start to see some weak, you know, like that curvature we're seeing on the S&P is already telling me, hey, I got to be comfortable. I might not catch the exact top, but I got to be comfortable taking some of those profits. Okay, you're not on Telegram yet. Machi HK, I will. Let me just show you this real quick here, Ellen. All right, I'll get this to you somehow, Machi HK. But there is a link that he sent me, an app download link that he sent me for the UK. All right. Dad87, welcome in, man. Hey, Divine Hood, as always, thank you for the TA. We need to get better on trading ranges. Yeah, range trading, yes. For me, we're in quite a tight range on Bitcoin, and I'm not looking at trading like the internal levels so much of the range. I'm looking at trading those. Hold on, let me just look at this real quickly here. I want to see on the US 30 real quick about that major trend of the pitchfork. Let's do this real quick. And we're going to put that. You might be able to continue up to about 58,000, 57.5 to 58,000 on this US 30. All right, for Bitcoin, Dad87, I get what you're saying. The thing with these small trends like this, first of all, you had a very volatile move last week. So you're seeing a little bit of a cool off and a reset in the markets. Panic is calming down a little bit. Fear is subsiding. And so it's going to be mainly like a lot of people got wrecked also last week. They're staying out of the markets for now. So waiting for a little bit of a sign. But for me, within this small range, I'm looking for the liquidity, right? Now, I'm not looking at internal golden pockets. I'm not looking at internal golden pockets or internal support levels and stuff like that. I'm really looking at taking out the highs of the range or coming down to major support levels within the bounds. This, by the way, guys, if you didn't watch yesterday's video, this 63,000 to about 62,600 is a pretty major support level, in my opinion, because it is the bottom of that pitchfork. You see that pitchfork is in there, the bottom of that pitchfork. It's also your previous POC, your POC of that 2024 range, and then it's your 786 Fibonacci retrace there. If you pull it from the $60,000 lows up to Monday's highs, it is your 786 Fibonacci as well. So for me, that is a pretty significant support level down in this area. And then I believe there was a daily level there as well. Yeah, there's also a daily level in there. So pretty significant support around 63 to 62.5, let's say. Above us, we do have that naked daily point of control that is coming in at that pitchfork band, the top of the pitchfork band. So we're finding resistance right now. Let me hide these. Let me clean this up a little bit. So on the higher time frames, we're finding resistance at the bottom of the pitchfork band. We bounced from the bottom of the pitchfork. We're trying to get back inside the pitchfork band. If we can, maybe come down, grab last Friday's lows, and then see a move up, we might be able to get a move up to hit that naked daily at the top of the pitchfork band, and then start, that might be your bigger three-wave corrective move, and then you're going to dump. So I will be looking at $73,500 as well, just because of the level that's the naked daily at the pitchfork band. Yeah, Mach HK, I will try to send that through the Discord. Let me see here. Let me do this. Okay. And now let's go. All right, there you go. Okay, so there's that. Could you also apply your TA on USDT dominance? Yes. So we we looked at USDT dominance on Friday, but yes, you absolutely can. Like this TA does work on Bitcoin dominance and USDT dominance. Now, here's the thing, guys. Actually, you see this line? This was from last Friday. So I was suggesting that we get the SFP of this high. We see a little move down before coming up and taking the SFP of the larger highs. It has happened. Now that move down happened pretty much immediately. I was expecting it to take a few days of a move down before coming up ultimately to 9.5%. But if we look at our internal highs up here, these internal highs was a double top. So we would definitely see some sort of reaction from those double top. But the main highs where we also have sort of a double top is these two highs up here. So we saw from these two highs some liquidity being grabbed, even though it's not liquidity per se. You saw a drop down, and now we're starting to, I expect a bounce where we could continue up to the 9.5% level. And you can see here, it did happen exactly like I thought it was going to. It just happened faster than I thought it was going to. And this still could be, once again, a three-wave corrective move down. So we could make another local low before seeing that rise up to 9.5%. But at this point, it is likely to me that we are going to come up to 9.5%, potentially taking out those highs at 9.5%. What I would say here is this range, this upper range of USDT dominance, we can now look at the value area low of that range, or excuse me, the value area high of that range, because we're breaking out of that volume profile, that previous range volume profile. So that value area high there is going to be your previous value area high, is now going to be acting as support. And where did we drop to? Look at what happened the other day. We SFP'd the highs, or those internal highs at 8.5%, pretty much dropped to the value area high of your previous range. And if this holds, so we might start to form a range, a very internal range in here, take out the lows and actually hit the value area high, because we haven't quite hit it yet. So it'd be nice to take out these local lows and actually hit the value area high. But overall, what we're looking at now is if this value area high can hold as support, you're going to expect to move up to take out that liquidity above us. On the other hand, if we are, ranging, and then you break down inside of it, you're probably going to come to the value area low of that range, or at least the POC of that range. So we would be looking to potentially come back down to the POC, which would be at 7.2, or even that value area low. And that value area low is actually a very, very important level. This value area low is going to be at 6.5%. Now, the reason why that value area low is so important, because look at how important of a support resistance flip it is as well. You can see it was acting as support during this entire upper range in here, and then we lost it. Hold on. It was acting as support, even kind of support in here, but you started to find that weakness in here. Low time frame back test, you rejected low time frame, you made new lows. Now you come for a higher time frame back test, you reject, you expect to make new lows, and we made new lows. But once you lost that value area low, it was now acting as resistance, front run here, but pretty much resistance, and then resistance during the bull flag that we saw the last couple of weeks, and now we're breaking out. So it is going to be your macro support. In some ways, that's your most important support. So if we lose 7.6%, we're probably going to, you might see a bounce at the POC, of course, but we're probably going to work our way back down to back test those prior highs, of this range, right? And then if you lose the prior highs, you expect to come down to the value area high. Wait, what am I doing? There we go. And now that also we are, I'm just going to get rid of this now. Now that we are starting to push back up inside this upper range, we broke out of this lower range, we can actually take and combine the ranges because now they're starting to become one giant range in here. So you can look at that. And I would even say that value area high is going to be important as well, around 6%. So 6.5 to 6% is going to be major support for USDT, where if it bounces from that area, maybe we're going to continue up here, grab liquidity. After that liquidity grab, we might see a move back down between 6% and 6.5%. And then if that bounce, if it holds this general area between the value area low here and the value area high here, if that general area holds, you're in trouble because you would expect it to continue the trend to the upside, even if it's just going to be a double top. You should stream more often, bro. Limitless, I stream 3 times a week. I stream Tuesdays, Thursdays, and Fridays at 2 p.m. And then I do videos Mondays and Wednesdays around market close. Weekends, I tend to take weekends to spend with the family. Every once in a while, I will stream on a Sunday if something is actually happening. But Saturdays, nothing happens on Saturdays anyways. Guys, like, let's look at last Saturday. Let's look at the last few Saturdays on Bitcoin. Literally nothing happens. It is the slowest, lowest, crappiest price action that is almost untradeable in my opinion. And why would you waste your entire day looking at, look at this was Saturday in here. This itty bitty little bit of price action here was Saturday. If we look at last Saturday, it was this itty bitty little bit of price action right here. And then the Saturday before that, well, that Saturday actually was aggressive, but that was the first aggressive Saturday in quite a while. Usually those Saturdays are, look at, this was Saturday in here. Like nothing happens, guys. Nothing happens. So like, why waste your day on Saturday? Go enjoy life. Show us how to range trade. Okay, so when you're, first of all, it's important to know that assets do range more than they trend. I would say the only exception is the S&P 500. But generally an asset ranges 70% of the time, or 65 to 70% of the time, and trends that other 30 to 35% of the time. So when you're in a range, it's important to diagnose certain levels within the range. So let's just take this little mini range, for example, that we're in for the past 4 days, 5 days here. You can look at this range. First of all, you're going to want to pull your volume levels within that range. You want to establish your highs and your lows within the range. So right now, I'm only going to be looking at this here, but technically we could classify this whole thing as a bigger range as well that could be occurring. But because we're squeezing tightly within this range, this is what I'm concentrating on now. So you want to pull your volume profile for that range, starting, and remember, this tool is called a fixed range volume profile. It is giving you the important volume levels within a fixed range, not within a fixed trend, but within a fixed range. So that you're pulling it from the beginning of the range to the end of the range, or to where the range is currently at. You're going to want to be looking at those important volume levels, value area high, POC, and value area low. And then you want to mark out your key highs and lows within the range, your liquidity, right? You can mark out internal liquidity, but it's best to mark out the absolute highs and the absolute lows of the range, because that's where your key good liquidity grabs are going to be. And then, of course, you can pull golden pockets. So like, say when this range was just starting, this was a low. We came up, we took out the highs of the range. We SFP'd the highs of the range. Then you can pull your golden pocket, 7.8, in this case, I think it came down to the 7.86. Yeah. But you're going to look at your key Fibonacci retracements. And if you have confluence there, like at this 7.86, we also had our anchored VWAP really close by. So this would be a little local internal support of that range where you could have looked for a bit of a reversal. Same thing. So you bounce from the 7.86, you bounce from the anchored VWAP. Now you're going to pull your golden pocket from the new range high to that low that was just made, And where did you reject? You rejected at your golden pocket, which was also in confluence with the pitchfork band. So you could have looked at shorting this little guy. Now, I would have waited because you wicked up past it, right? So you wick up past it. As soon as you start to lose it again, you can put your stop above that local high that you just made, and I would be targeting that low. That would be my first TP, is a targeting the SFP of that low. That's a 5-to-1 scalp trade in a super small move. And then today, you could have taken the SFP of this low, even though this is an internal low. That's why I did not take this long today, guys. I did not take a long from the SFP of yesterday's low. I was waiting to come down to this level. I'm not really interested in internal scalps within this range right now. So if we do come down here and we wick down past this low, and then you start to reclaim it, you can enter long. As soon as you start to reclaim it, you can enter long. Your stop loss would go below wherever that wick is. And in this case, what would my first TP be? Well, I would pull a golden pocket. I would pull a golden pocket from the range high to the new range low. And I'd be looking at this golden pocket to see if there's anything else there. So do we have anything else there? Not, I mean, you have some internal liquidity, an internal liquidity grab into that, but you could look at your naked daily points of control within that range. So you would go to your periodic volume profile indicator. We could look at our naked daily points of control. Do we have one there? No, we don't. It's not naked anyways. So there's no real good naked points of control within this range. So in that case, I would probably be looking at, once again, in sideways ranges, 886s and 786s give you good bounces. I would be looking at the 786 because you have that better high up there. So my first TP1 would be right here, the SFP of this high into your 786. TP2 would be the SFP of this high into your naked daily point of control that was up at 73.5. And you would leave some open to run just in case this is going to break up to the 0.5 Fibonacci. But you're looking at key liquidity, key internal support levels like naked dailies, Fibonacci's. And then, of course, you can, if it matches with some of your more macro resistance levels, like in this case, the pitchfork band, then you could also use those as kind of confluence. How do you get so proficient with Elliott waves? Yeah, it's just experience. XBT beam. Elliott waves are very complex. And actually, I still classify myself somewhat as I would say intermediate rookie. Not a rookie. I would say intermediate rookie. There's definitely guys way better at Elliott waves than me. Coons is one of them. But Elliott waves take, to master Elliott waves, to master like the different levels and stuff, I would say it's a 2-year process to master Elliott waves. And that's if you're committed for those 2 years. But what you can look at, even the two most important things to know with Elliott waves is the two types of structure there are. Impulsive structure versus corrective structure, right? Corrective structures usually happen in 3-wave moves. Impulsive structures happen in 5-wave moves, or it can be like a double 1-2, 1-2, 1-2. Then you get your big third wave. And if you have 2 1-2s, you're going to have 2 4-5s. And the way to classify those is if there's overlap between the highs of this first wave and the lows of this wave, you can't say that this is a 1, 2, 3, 4. You say because the overlap is there, you now have to classify it as your primary 1, your primary 2, secondary 1, secondary 2 because of that overlap. And then generally you get a big gap and a big volume spike in your third wave. It's generally your longest, strongest wave. And then you'll start to get that selling exhaustion towards the end, which usually creates that channel. And, you're looking to short those 5s for a breakdown. And just there's plenty of good resources. Elliott Wave International, great website to look at. Coons himself, Coons Trading, he's coming out with a Elliott Wave compendium, which is going to be very detailed and have a lot of analysis there, good analysis there, rules and validations, things like that. But it does take time, man, and it is experience. A lot of it's experience. Okay. Samuel, thank you so much for the super chat, man. I appreciate you so much. Much love to you, man. All right, where was I? Sol hit 60 bucks already. Yeah, let's go through Solana real quick. So Solana, guys, man, low time frame. I'll cover this in a second. I'm actually looking for a potential bounce soon here at like $82. The thing with Solana, I'm gonna hide this lower stuff. Solana, we saw the distribution. Unfortunately, the big distribution happened, right? So for 2.5 years, we've been in this upper range up here. Let me turn this weeklies off. So we've been in this upper range since March of 2024. So almost 2 years. Sorry, almost 2 years long. Let me get a drink real quick, guys. Okay, so for almost 2 years, we've been in this upper range, and there was two possibilities here. This could have been, because obviously this was impulsive price action, right? This is an example. 1, 2, 1, 2, your big third wave, then you get some 4 5s in here. You know, you get those 1 2s, you get the 4 5s. We could be in a impulse to the downside to come all the way down to $31. Hopefully not. Hopefully not. And you could also say, as far as Wyckoff distribution accumulation, this upper range here on the weekly time frame, or I know we're on the 3-day chart, but on the weekly time frame, this could be distribution. With this being your tap 1, your tap 2 in here, and then your tap 3 is a lower high in a model 2 distribution. Then you start to break the you start to distribute down with a high break in volume. So on the weekly time frame, we had either distribution on the weekly time frame, but on the daily time frame, as a bull, our hope was that down here we were creating a daily accumulation pattern. And we were looking at that. If you zoom in on the daily, we were in that little range between the POC and the value area low. Once again, important volume levels. And remember, in range trading, volume levels are your most important levels in some ways, volume and liquidity. So we were trading between the POC of the range and the value area low. We had our nice little tap 1 in here. We had a potential tap 2 here. And if we would have held this low right here, we could have had our tap 3 and we could have then distributed to the, expansion. We could have saw expansion to the upside in accumulation. But unfortunately, we didn't see that. We saw the distribution to the downside. We broke the value area low with high volume and dumped aggressively out of our bigger 2-year-long range. So unfortunately, now we have to say this was a topping reversal pattern on high time frames, and it's likely that we dumped to lower targets. Now, that naked monthly point of control and that weekly level we had was a levels I was looking at, you know, a weekly at $70, a naked monthly at 73. Yes, we wicked past it a little bit. I would say our next big level is around $61 to $57, this area in here. Do we have any? This shouldn't be green, or that shouldn't be blue. Hold on, let me make that. Yeah, and so I would say now, because there's not a lot in here to keep us. Now that we're distributing down, and once again, we could be looking at a couple things here. In a bullish scenario, you could still be looking at this as a large 3-wave corrective move before hoping to come up again. In a bearish case scenario, you ended your impulse, right? 1 2 1 2 3 4 5 4 5s in here, and now you're about to see a move all the way down to the golden pocket. Now, generally, after an impulse finishes on high time frames, this double 1 2 impulse that finished on a super high time frame, you're looking for a corrective move. So right now, my main probability is that we're looking from the all-time high. We're looking for a nice corrective move. But in a sharp correction, you can come down to the golden pocket of the impulse, and that is $31. So if you go from the low of the impulse to the high of the impulse, you're looking at that golden pocket as being the primary target for that higher time frame corrective move. So coming down to $31, I would start buying heavy at $31. I've already started buying, but I would start buying in heavily at 31. The way that we lost this the other day was pretty aggressive. And if we're looking at even this rejection from $148, by the way, we called this short perfectly ahead of time. Actually, we were coming up here during a live stream. If you guys remember that Tuesday, it was a liquidity grab into a logarithmic golden pocket. And if you pull that golden pocket from the last big daily high to that range low, and you look at the golden pocket, now because that's a 32% drop, you need to make sure your golden pocket is based off of log scale. We rejected exactly from that key psychological number that's programmed in our subconscious minds, that 618 Fibonacci. You grab the liquidity of your 3-month-long range highs right into that golden pocket, and that's when you saw your aggressive dump. Now, within this dump from $148, this is what we need to diagnose here. Is this likely to be done with? Just like Bitcoin, this is equal to Bitcoin's 98K highs and its 60K lows. If that was Bitcoin, that's the same move. But it's 148 here down to 67 here. So what we're looking at is inside of that dump, is it done with yet? Let's see if we can have an Elliott wave count within here. And you can see it's very similar to Bitcoin. You have your move down, your 5-wave move down here in a wave 1. 1, 2, 3, 4, 5. Actually to this low here. Then you had your running flat again, just like Bitcoin had a running flat. All of this has to be the third wave because it's so aggressive with volume, the dump and with volume. So now we could be in a 4th wave retracement here. Now your 4th wave is likely to come up between the 382 and the 0.5. So you got to pull those Fibonacci targets from the highs of wave 3 to the lows of wave 3. Okay, now you're going to put your targets between the 382 and the 0.5 because that's where the 4th wave rejects from. If the 4th wave hits your golden pocket of that same pull from the highs of 3 to the lows of 3, it will invalidate the impulse. But that's much higher. We're not even thinking about that yet. So now we got a nice strong low. We're pushing up. I would be looking now over the next couple weeks for a 3-wave corrective move to minimum hit 90.66. You could come up to 97.8, which is also some key lows that were support, 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 and then you lose it. Now, are you going to back test it before making a new low? So in this wave 4 corrective move that could take a few weeks, we could come up to 97.8. I don't like how, unlike Bitcoin, Bitcoin has hit the 382 multiple times on Friday and Sunday. Solana has not hit that 382 yet. So I am still expecting another move up locally. That's why I'm looking locally for longs on this thing. And my first TP will be that 90.66382 because now we have a liquidity grab right into it as well from Friday's highs. We have a liquidity grab from Friday's highs right into that. But now zooming in on the lower time frames, let's just go to the hourly chart. I'm looking at this kind of descending channel that we're seeing. So if I turn on that descending channel, you're going to see that descending channel was pulled from the highs to your next lower high to your first low. And I've had this channel on my chart for a few days now. The midline was being really respected over the weekend. Saturday and Sunday, the midline was holding. Yesterday, we had lost it, fell to the bottom. We bounced directly from the bottom yesterday. Then we shot directly up to the top yesterday. We rejected from the top yesterday. That was also, I believe, your golden pocket as well. So if you pull a golden pocket from that channel high to that channel low, no, not, it was, okay. It was your 786. There was something else that was there. Yeah, I guess that 786 was there. Anyways, you bounced from the bottom of the channel. You came up to the top of the channel. You rejected. Earlier, we lost the midline earlier in the day. Today, you can see we lost the midline. 1 back test, 2 back tests, 3 back tests. We're not able to get above the midline, so I expect a drop to the bottom of the channel. It would also be a liquidity grab of your lows from Monday. Bitcoin got the liquidity grab from the lows from Monday already. earlier today. Solana's just coming down and attempting it. You're not really seeing a good reaction here because we did just now sweep those lows, but you had one hour green candle, and now you're dropping below them again. So I would say at minimum, you're probably going to come down and test $82. You want 82 to hold. You want to see this kind of corrective channel hold. And if it does hold, then that's when you could see a shoot up here, and you could see that bigger three-wave A, B, C, and you know, depending on where this low is made, we can pull that C wave target as well. You'd be looking at your trend-based Fibonacci extinctions in that case. You'd pull that trend-based Fibonacci extinction, and I'm just going to put it at the bottom of the channel. Let's see. We'll go our ABC targets, and then we would want to make those not off log, because that's, well, I guess you could do either one. But yeah, 109 actually looks good, because 109, I want to make sure that's not our golden pocket though. So we're going from the highs of 3 to the lows of 3. Golden pocket, and I do believe that is more than a 30% drop. Yes. Yeah, it's more than a 30% drop, so we're going to put this based off log scale. Okay, if you do hit $100, it will invalidate this as a wave 4. That means it could be impulsive. So if you come up to 100, you still might reject from that area, but it means that it could be bullish for overall for Solana, that this could have been a major low. So in that case, I wouldn't be looking so much at the trend-based Fibonacci extinction, or you look at the 618. Your minimum target could be that 618. So yeah, coming up to $95, which would be right around your 0.5. So I'd be looking at this potential 3-wave corrective move here up to this general area before seeing a final 5th wave to the downside to take out your lows and probably come down here. So now we can also look at our zooming in again on Solana. We can look at within this corrective move that we're seeing, we can look at key levels. So right now, obviously, we have our high that is going to be at 89.86 or whatever this is right here, 89.77. So pretty much $90. Coming up to an SFP of this high into this 382 would be a nice potential short trade. If we can bounce here, come up here, SFP, as soon as we lose that, enter short. Stop goes above the local high. I would be targeting at least the lows again of wherever those lows are of that sideways range. But you would also want to look at targeting wherever that golden pocket is. That is just an example of a way to trade, look at this scalp short from here. And of course, I would leave some of that short open because overall we expect new lows. You could also pull your golden pocket from the lows to the highs so far, and at that $75 area, I believe there's going to be a fresh daily level there. Let me make sure. It's a little bit higher. Ooh. We have a daily level at 78. And we can look at our naked weekly points of control in here. I didn't mean to turn that on. So no naked weeklies. Yeah, look at how nice look at how nice this $90 resistance is. You have your naked daily point of control up here as well at 90.6. So an SFP of that high into 90.66 or 90.8-ish, this general area right here. Super nice resistance. And then to the downside, honestly, we don't have much to the downside except for that golden pocket and that daily level. And there's not really nice confluence between the two. I would have to say, let's look at our 4 hour and see if there's any fair value gaps or order blocks. No real order blocks in here. Do we have any 1 hour order blocks? Yeah, I mean, we have some nice order blocks. You can see this 1 hour order block right above this daily. That's kind of a nice little supply zone here. Man, there's just not too much. You really don't want to lose this channel, guys. We don't want to lose this channel. Now, money flow is not looking so good, but we do have potential bull dibs on the 1 hour chart. Lower lows here, higher lows here, and then we could get NAMI confirming some immediate bull divs here if we bounce from $82. But if you start to lose this channel, you're going to see a pretty significant drop. I guess you do have this nice 1 hour order block as well, right below it. So, you know, 81.25-ish. Yeah, please like the video, guys. Jaffiel, welcome in, man. So good to see you in here. Much love to you. Please like the video if you get any sort of insight or learning from this video, from this live stream. David B, what's up, man? When I feel a real move, there's plenty of time. Yeah, there's going to be plenty of time to catch the move as well, guys. The big move. Generally, it's not a straight up V-shaped recovery. It is a range that happens. So a lot of people were seeing FOMO on Friday when Solana and Bitcoin and, you know, Bitcoin range pushed up $10,000 from 60K to 70K. A lot of people were starting to see FOMO and starting to long towards the top. You are generally going to have time. So this could fall, you know, even if it falls back a little bit or, you know, grabs those Friday lows, you're going to have time to get in towards the macro lows. Now, when we get down to 57, I think we could see something like this on the higher time frame, guys. So this is our wave 4 that's happening over the next week to 3 weeks. We're going to see a wave 5 to come down probably to around 58, 57K, maybe even lower. Hopefully not lower, but maybe even lower. We're probably going to see a first nice initial bounce from this level. Now, if we can bounce from this level and impulse up to take out your local wave 4 highs, wherever those wave 4 highs are going to be, right? See a drop down now to the golden pocket pulled from this low to this high. That is also going to create, what is it going to create? Your model 2 accumulation. There's your tap 1. Here's going to be your tap 2. Here's going to be your tap 3. Or you can call that the inverse head and shoulders if you're a pattern trader. So you're going to have time within this larger potential range that develops over the next month to 2 months within this guy to start catching near the lows. And then what you would also want to do is pull your volume profile. You can't really pull it now because it's only going to go to here. You would pull that volume profile of this entire range, and your golden pocket is probably going to be close to your value area low. And so if you have golden pocket value area low confluence, that could be, so you could try to long this, take some profit when you break your wave 4 highs, and then when you come down to make your higher low, you compound that profit back in, hoping that this is going to expand upwards. Yeah, spinning some short profits. Awesome, Samuel. Well, that's awesome. You're catching some good shorts. Oh, you broke his joke. I'm sorry. I didn't see. Well, Samuel, keep going, man. I know you're in here always constantly, and I hope that you start getting some of those good profits you want to get, man. The Gaussian channel. Yes, we could check the Gaussian channel. What do you think of ICT? I don't know if I've ever heard of ICT. Oh, I'm sorry, Inner Circle Trading. I thought you were talking about a crypto. Inner Circle Trading, I've looked at some of his stuff. I do like some of the smart money concepts he talks about, but I formed my own strategy that's just far different from his. So, and like if you have a strategy that works, you generally will stick with that strategy until you need to change it. So I think he's a great trader. Obviously, you know, he's proven himself over the years. The strategy's proven itself, but I just don't trade using that style too much. Jesus Save 77, welcome in. God bless you as well, and thank you so much for being here. When you say a reclaim of the level, you look on a specific time frame or change of structure on small time frame, 1 minute, 5 minute. Yes, Dad87, great question there. So for instance, if we're going to see a swing failure pattern of this low on Friday and then the reclaim, because this is a lower time frame range here, I'm probably going to be looking at a 5 minute to a 12-minute candle, maybe even a 15-minute. But I want to see a reclaim. But say we're grinding down. Let's just zoom in here onto the 5-minute chart and see how we're kind of grinding down right now in like this wavy bearish structure here. If we just keep grinding down like this, and then we get that SFP and we reclaim, you could long as soon as you reclaim and close a 5-minute candle above. That's probably what I'm going to be looking at, the specific time frame I'm going to be looking at for this coin. Or you could wait, if you want to be even safer, you could wait until you break market structure bullishly by breaking this lower high. And you could wait for a retrace upon that break and a higher low being put in, and you can long here. So your entry is going to either be right here or right here, around here. And then, you know, you could keep going. The thing is, sometimes on an SFP, because you're grabbing liquidity and it's used as fuel to push you up, sometimes you don't get that. It just does the break, the reclaim, and it keeps going like this. And then your next pullback is going to be to like right here, and then you keep going, you know? So for me, with a swing failure pattern, it's nice to have bull divs confirmed. It's nice to have some bull divs confirmed, but it's not necessary. The only confirmation for a swing failure pattern is a piercing below the level and then a reclaim and candle close above the level. That's it. Now, if you have added confirmations, bravo, great, even more confidence on the trade. But with a swing failure pattern, you're looking for the pierce and the reclaim. For instance, Friday's high. It was kind of a triple high in here, if I can get it. You can see kind of a double top right here. We pierce above it, come down, your next, so the first 5-minute candle actually closed above it, but you came down and you closed the next 5-minute candle below it, so you probably would be in a short. As soon as you lost it on that second 5-minute candle, you could, you know, wait till it closes and even be down here. Your stop is going to go above that high, and you would be targeting the lows from, you're really targeting these lows, but you could even target wherever that golden pocket was, pulled from this low to that high. And we came down to the 786. Remember, that was the 786 right there. So that's still a 3.5 to 1 risk to reward trade there. And I would leave some of it open to take out these lows. So your overall trade would be like a 5 to 1 risk to reward ratio. And of course, you would still be in that. But great question, Dad87. Really great question. I guess to answer it, it depends on the time frame SFP you're looking at. Like on the 70K last Thursday, when we were coming down to SFP 74K, I would probably be waiting for at least a 15-minute candle close above 70K, 74K, when we were looking at this the other day. It depends on how, like, what type of trade it is, if it's a scalp trade, if it's a day trade, or if it's a swing trade. But also, I guess it's subjective for whatever if you're in a small range, it's a little bit subjective depending on what your target for that scalp or day trade long is, or short, whatever it is. Yeah, he did speak highly of Divine Hood, and I and people before me mentioned Divine Hood. Oh yes, Coons is awesome, you guys. I really love him so much, and he's such a great Elliott wave analyst, and just a good trader in general. Sometimes I get early and I get stopped out. Yeah, I see what you're saying there. So in that scenario, Dad87, you really just want to, like, for instance, here, you on that, let me go back to the 5-minute chart. You pierced above it. You close that 5-minute daily candle above it. And then the next red candle, you would have been losing it on the next red candle. You wouldn't have got stopped out though, even on the next red candle as soon as you lost it, because you want to set your stop above the high, right? Above the local high. So even if this candle came all the way up here above the liquidity level again, you're still not rising above that level. So but I get what you mean. Sometimes they're not as clean. Sometimes the market's not as clean as we would like it to be. So a lot of that's going to be practice for you and experience on that, is just learning when it's a good SFP. Another thing you can look at is you go into your liquidations and you see if there's a lot of liquidations on that low. AGGR is a good thing you can look at. This has not been working for me for quite some time now, but this will show liquidations that happen as well. You can get something that will show you liquidations, and when you have liquidations on the SFP, that's generally good for a reversal. Beer or whiskey? Man, I like beer in general, but I do like a good whiskey as well, Glasshopper. I like IPAs. I like them. I don't drink a whole lot, but I will partake every once in a while. I had a couple beers on the Super Bowl Sunday. Watched the football game, which I thought sucked, to be honest, for the most part. Milk with protein. That's all. I also drink protein shakes, but I drink mine with water, Samuel. I don't know. Is that a crime? I drink protein shakes when I go to the gym every day, or after the gym, pretty much. Can we check SUI on? Yeah, we'll go into some of those. So let's look at SUI here. SUI is long-term time frames. Man, I think SUI's coming down close. This was the big support level. Remember, guys, we were looking at SUI potentially being in. We had our impulse to the upside in here, and we were looking for a potential 3-wave corrective move to come down between the 1-to-1 and the 1.236. And if we look at those targets, they were between like the bottom of the pitchfork. Where is that? Did I get rid of it? Yeah. Let's throw it back on. So between the 1-to-1, which was pretty much at the bottom of the pitchfork, and that 1.236, which was at your key daily order block and a naked monthly point of control, and it was also your golden pocket. If you pull your golden pocket from the lows of the impulse to the highs of the impulse, you could see your golden pocket was also there. So that 109K support, or $1.09 support, was really, really key support. We lost it. We fell straight through it. Let me hide this for a second. And we still haven't hit the 1.618 yet. So we could drop to 70 cents. If we're going to see this as a larger 1, 2, 3, we could get a significant move up in a 4 before seeing a 5 and probably take out these lows. Unfortunately, the fact that we're losing, so this upper range in here, you could see we had an upper range in here, and we're starting to lose this upper range. We could even pull this volume profile now and look at like this whole upper portion in here, but you can see the value area low is holding as support. Support. You lost it. You flipped it into resistance on the bearish backtest. And that's where you really reject, right? You lose it. 3-wave corrective move to bearishly backtest it. You reject. Now you expect to at least take out these lows, but probably come aggressively lower. So you did. Unfortunately, now this order block did not really hold. You can see we got a small reaction from the order block. Small little push up. I mean, it was good for a scalp trade for sure. I can get rid of this naked monthly now. We can get rid of this order block now. And I would just expect this momentum to continue here until like we want to see some cool off. Now, we can zoom in on this last dot on the bearish backtest of your macro value area low. We can look at this price action. So what I don't like is this move here. Looks like a 3-wave corrective move to start it. So now you're looking for a potential, like another 3-wave corrective move in here. Some sort of flat or running flat in there. It's really hard to start the Elliott wave impulse from this high. So you might have to start it from this high, but you're looking at a 5-wave move down or an impulse down from there. One, there's your running flat in a 2. All of this would have to be your 3, and now we're probably in a wave 4. The way this is curving over, though, you can see right here. Let me turn on that parallel channel. I've been looking on the lower time frames. We had our big push up here, and then we've been correcting down within this channel. So I've been focusing on kind of like Solana, but Solana's is a lot flatter than Sui's. We've been pushing within this channel, and you can see that it is like yesterday, we bounced from the lows of the channel, but unlike Solana, we didn't quite hit the highs of the channel. Now we're losing the midline, just like Solana's losing the midline throughout the day today. We're losing the midline. I think that we could come down to hit your golden pocket. So if you're going to pull your Fibonacci for that golden pocket, you could come down and hit that 87 to 86 cent golden pocket. And I bet you there's going to be a daily level down there. Yeah, pretty much right next to that golden pocket, you have a daily level. But on the higher time frame, you're asking about the higher time frame. It's likely now that we at least we're probably going to come down. I hate to say this low at 46 cents, but this higher low liquidity right here near that 1.618 Fibonacci extinction target, you might be coming down to that 70 cent area. You do have a little daily level and a daily order block in here. Let's see, was that hit yet? 79 cents. Yeah, you bounced from that daily at 79 cents. It was an order block. That little order block right here, which ends with a daily level. So we're seeing that bounce from that order block, but that's it until you get to this low. So knowing that we're still trending bearishly, you know, you pushed up for one green daily candle and now you're kind of chopping back out again. To make another low and see some bull dibs, like you are starting to see some bull dibs on NAMI now. You can see lower lows, and if we come down, you have some higher lows coming in here. I would want to, actually, it's only really here. But money flow looks still bearish on the daily time frame. On Market Cipher B, you don't really have any bull dibs, and money flow is trying to bottom out. So what I would be looking at is we could zoom into the 4-hour time frame. If you don't bounce from your daily and your golden pocket, because we might see that 3-wave corrective move, right? A wave here, B wave here, C wave. You might see another 3-wave corrective move in a wave 4 before grabbing liquidity at 74 cents into 70 cents for your wave 5. And then you could see a bigger push up. But yeah, so I guess 86, like 87 to 88 is a pretty decent support level for internal support. Oops. Internal support in here. Yeah, you have a naked daily that's very close. Damn. I wish it was a little bit closer, but Actually, let's look at our 0.5 Fibonacci. No. So yeah, that's, I would say generally, I actually kind of like the naked daily and the daily better than the golden pocket. So I would probably throw this like this. Because your golden pocket is right on top of the daily. Oh, your non-log golden pocket. I'm sorry, I had it on log before. So your non-logarithmic golden pocket is right on top of that daily at 8812. So with your golden pocket on the daily and then your naked daily just above it, you're probably going to wick past that naked daily. You're probably going to continue grinding in here until you see something like that within this channel. And then hopefully you can break it up and start to sweep all of this liquidity that was in here. Could be a nice little internal long position. Lower time frames, you're probably going to take out your lows from the crash and probably your $74 or 74 cent lows. Okay, what was I just? Ondo. Wow, it looks like we're losing some big supports on Ondo as well. Man, yeah, everything just crashed. So this was trying to hold as support. You can see in here it was trying to hold, but with that capitulation that happened, you busted straight through it. And unfortunately, you busted past your 1.236. Did we hit the 1.618? Not quite yet. But now I do have to say that this looks like it could be from the highs, a wave 1, a wave 2, and this is probably a wave 3 before you get another 4 and then another 5. But Ondo, as far as Coinbase goes, I mean, we're coming down to the all-time lows. Let's see if there's... Yeah, you're pretty much at all-time lows. Rather than your listing price, you're pretty much at all-time lows on Ondo here. Wow. Okay. Jesus. I'm sorry, I shouldn't use Jesus' name in vain like that. I mean, goodness, I should say. You know, the other day someone was asking Jason, who are the crypto nerds? Maybe I'm a crypto nerd because I just used goodness. Gosh. All right, let's see this low right here. I think we're going to come take out that low. We're so close to it. It looks like we're probably going to continue down to take out that low. But unfortunately, like there's nothing else. I mean, this is pretty much the all-time lows here. So if you're bullish on Ondo, I would be interested in buying once we start taking out 19 cents, but you got to be careful here because this could continue in a wave 4 before seeing a 5. You know, I would be waiting for some sort of a range to form down near the bottom. You have that fresh. I'm pretty sure this was hit though. Let me just mark this real quick. Actually, it was. It's not even naked anyway, so never mind. Yeah, I would be looking to take out 19 cents, honestly. And until this starts to cool off, I would want to see a change in market structure in order to start buying this on spot. Even here, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. I would wait until we get some sort of change in market structure here. A breakup, break your market structure bullishly, and then on the retrace, that is when you can start buying and you can start looking at longing. Until that happens, not interested. Tony, he was discussing people who didn't and do Elliott waves correctly. Yeah, I go to Coons. Yeah, Coons is definitely the best Elliott wave guy I know, and he's like, if I'm saying something that Coons says is invalid, he's right. Okay, like he understands it far better than me. Trust me, I know my place there. Next soul short, $90 to 30. Well, I don't know. I don't know if we're going to go straight to 30, but $90 is that 90.66 area, 90.6 to 90.8 is pretty good area to look for a short. But I would also be looking after this push down ends. I would be looking for a significant retracement up, right? You would probably, now that we're breaking this 2-year long range, the value area low is at $123. Now that we're breaking this, after you finish an impulse down, let's say we do finish it around 61 to 57, you're going to be looking for a more macro relief rally, and that back test is going to be all that matters right there. Because if you back test that prior range and you reject, that's when you could get the dump to 30. But you're probably not going to see a straight dump straight to 30 from 90. You're probably not going to do this and then go all the way. I mean, it's possible. Don't get me wrong. It is possible. It would just be highly, highly aggressive. Turbo? Yes, we sure can. John? Okay, obviously, this is old. No, we did get a decent little swing failure pattern and then push up. I guess it wasn't even a swing failure pattern. It was from that low. And this channel we can get rid of. All this old stuff. Man, so your prior lows and your weekly, you kind of wanted this level to hold as support. You can see we busted straight through it with that big volume capitulation candle there. So we can say nope. Yeah. So that's your dump on October 10th. That big dump there. But you've really continued to grind down here on Turbo. Man, this thing just looks, I don't know what Turbo is, but look at this weekly level at 0013. Huge support there, and now you're losing it. So now it's going to act as resistance. You're pretty much at all-time lows on this thing. At least on the Coinbase chart, you're at all-time lows on this thing. Is there a better? Okay, here we go. So we're looking at the macro downtrend, right? Macro downtrend, lower lows, lower highs, lower lows. So we're going to take that macro bearish pitchfork, looking at the macro bearish trend. So you're going to go from those macro, the highs to the macro lows to that lower high on the macro. And look at this, your October 10th dump ended at the bottom of the pitchfork. You dead cat bounce, you fell to the bottom band, nice strong bounce from the bottom band, but overall we couldn't really sustain above the midline. I would expect, because we're at this lower band now, oftentimes you will see it start to chop a little bit in here and start to weaken. You know, the selling pressure will start to weaken. That's what you want to start seeing, is some sort of descending channel range starting to form, because this is still highly aggressive here. Highly aggressive, dropping in liquidity for a month or so, couple months now, month or so, yeah. And you might come down to the bottom of the pitchfork, 0007, let's say. 68, 69. But this, once you start hitting down here, that is when I would start potentially looking for swing longs if we have some nice bull divs, which right now we, on NAMI anyways, look at this, 1, 2, 3, 4, 5. 5 potential drives of bull div coming to the bottom of your pitchfork in here. You can see that your daily candle closed the candle body at the pitchfork band. Yes, you wick past it, but the candle body closed. So overall on high time frames, this pitchfork band is still holding as support. Yeah, I do like this descending channel that we're seeing right here too on the lower time frames. I would actually pull it to this high. Let's go here. No, that's not going to be the proper channel. Let's do it the right way. Here, down to there. So you had your descending channel. You tried to break above it here. It was a deviation, and now you're back inside, and you're grinding in the midline. You can see the midline's holding you throughout the day today, but slow bleed down. So now we can look for if our golden pocket is going to be, yeah, right at the pitchfork band. Now remember how that daily candle closed right at the pitchfork band. So you're going to have a daily level there as well. Okay. We have a daily level of support right there as well at the golden pocket. And I bet you there's probably going to be a naked daily close by. Let's check it out. But look at this support in here. We're coming up to it right now, relatively quickly here. Nope, no daily NPOCs there. But I would say that's kind of your internal support level that has to hold is this right in here. 00988 to like 00978. Nice bull divs are starting to form here. Actually, so we have local bull divs right now. Today, lower lows here, higher lows here on the hourly. But if you take out this Monday low, that is when it's going to start looking really nice. If you take out that Monday low, because then you'll have regional divs, local divs, money flow starting to curve up here. Bull divs there as well. So yeah, that could be a good little support level. That daily in that pitchfork band. And if things get really bad, you're coming down here. Okay, I say malt liquor like hurricane is what I like. Okay, malt liquor, wow. Looks like it's going to join. Looks like it's going to join. Vala. Yeah, Valhalla in the grave, right? Sui. We just did Sui. We can do Cardano. Yeah, say. Let me check this chat real quick here. I have to stick to distilled water or distilled liquor and whiskey. I like beer, but I cannot drink it without severe negative health responses. Dang, David, that kind of sucks. Neuropathy. Ugh. Yeah, hops, something, celiac, is that what it's called? Something like that. That's why you should TP. Yeah, dang, Graph. I thought Graph was a good project at first, too. Let's go into Say real quick, and we'll go into Cardano. Say. So Say I did take a scalp long, but I'm pretty sure I got... Okay, we're at the golden pocket right now. So I like this little golden pocket. Once again, you're in a descending channel here on Say. Kind of that same structure that all of these coins are trading in right now, which this does look like a corrective move after this push up. So if we're going to see an ABC, like a lot of these coins, we're looking for some sort of zigzag correction, right? ABC. Coming down to the golden pocket is a common place for a B wave. So this has to hold. If this doesn't hold, then we're probably going to take out the lows. Let's go to the daily real quick and see if our daily... Yeah, our daily's pretty much... It's a little bit above us, but... There, and then... Because the thing is, guys, look at how big this wick was. So really, the candle bodies ended where we're at right now. Other than that big-ass wick, excuse my language, other than that big wick, So if you start to come in here and fill this, like you're probably going to just come down. There's nothing in here. Even on the low time frame 1 hour chart, there's nothing in here. This has to kind of hold. Higher time frame on say. Let's hide those. Yeah, unfortunately, look at what happened here. We came down to the bottom of the pitchfork. We bounced. Now that doesn't look like a big bounce, but it was a nice little scalp trade there. But we lost it last week, and then on Friday we back tested the pitchfork and rejected. That is very bearish to me. What was holding as support is now being flipped. What was holding as support is now being flipped to resistance. So it is likely actually that we're going to take out this low because of this bearish back test. Could we see, we saw the immediate low time frame back test of the next day. Could we see something like this first? A, B, C, taking out those local highs before taking out this low? Yes, but it is likely we take out this low now because of the rejection. But we might see another back test of it first. And then actually, let's go here. Yeah, and say, at least on the Coinbase charts at all-time lows pretty much as well. Losing this bearish pitchfork, man, this is just brutal. I did say on say, you have the 1, 2, 1, 2. All of this, unfortunately, could all still be part of your 3. And then you're going to see some grindiness and some 4-5s, hopefully just like this below the pitchfork. And then you break back into it and you start to impulse up. This could be a high time frame contracting diagonal. 1, 2, 3, 4, 5. And the reason why is because you always have the overlap in here. So this could be a high time frame contracting diagonal. When it ends, whenever this starts to end here, it could be a great long trade, a swing long, because then after this high time frame contracting diagonal ends, you might push up from your all-time highs to wherever this contracting diagonal ends down here. You might push up to that log golden pocket. So you might be pushing up to around 37 to 41 cents afterwards, which also happens to be a very key support resistance flip area. You can see it was macro support, 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 and then resistance. So I would say wherever this long is going to show itself, and we don't know yet because the momentum hasn't slowed down enough, that could be amazing. Amazing, amazing. And I will be looking to buy some Say on spot because I think Say is a good project. Okay, Cardano really quickly. I think we were looking to come down. Yeah, we did SFP those lows at 23 cents. So very nice SFP of the bear market lows. Guys, that's crazy. The bear market lows. But here's the scary thing. So you saw, by the way, we've been talking about this. You have your last impulse down right here. And we were looking at the 1, 2, 1, 2, your big third wave, probably ending here. Then you get your 4, you get a 5. So now we need another 4 and another 5. If you have 2 1 2s, you need 2 4 5s. There's a different way you could count this. Your 1 2's in here. Here's your 3. Here's a 4, here's a 5, here's another 4, and here's another 5 to end it. So we're getting towards the bottom, and actually that would be a nice low because you grab bear market lows. You grab liquidity of bear market lows. But the concern I see right now for Cardano is look at this range that goes back 3 years. Actually almost 4 years. It's like 3.5 years to May of 2022. This all bottom price action here. The value area low is at 27 cents. And you're back testing it as resistance now. So after grabbing the liquidity last Thursday, We pushed up on Friday to back test that value area low. And right now, we're not able to get back inside the volume profile. We're not able to reclaim the value area low. You want to be able to reclaim that value area low, and it's just not happening yet. Actually, depending on, let's zoom out here onto the daily. Actually, the value area low is shifted now. You are inside the value area. So with that new low, you are inside the value area low, which is a good sign. So after grabbing liquidity, you really kind of want to hold this 25.2 cent level. Let's zoom in here and look on the 2-hour chart. And let's pull our golden pocket. Yeah, your golden pocket's right there. That's going to be really nice. And I believe your daily level is going to be right there as well. Just like all the coins have a setup. Daily's a little bit higher, but you're going to be looking around that. So, man, TradingView is all messed up. So the value area's shifting on you quite a bit here. It can't make up its mind here. See, on the 1-hour chart, value area lows right down here with the golden pocket in the daily. On the higher time frames, it's up here, like at 25.2. But around 24.5 cents, 24.5 to 24 cents is kind of your only support level that we might see that 3-wave move at least. And then this could also be, if you start to do a 3-wave move to take out these highs, that would be pretty nice. And then you could start looking at forming a sideways range in here for some accumulation. Yeah, man. I mean, this is a nice little channel structure too. So see, this push up was pretty aggressive, and this channel that we're seeing right here definitely looks corrective. That's why I'm looking for another leg up afterwards. Not a bull flag. It's too long to be a bull flag. If you wanted to see a bull flag, you wanted to see it break out before your 1-to-1 Fibonacci time. So go from the low of the pole to the high of the pole. We're already past the 4 Fibonacci time, so it's not a bull flag. You cannot classify that as a bull flag. But let's look at our volume here. And so if volume is decreasing as this channel is forming, that means it's highly probable to be a corrective move. We can throw that channel on there. I would bring it to this high. Yeah, so see this little corrective channel here. As the channel is forming, volume is decreasing overall generally, meaning that this does look to be like a corrective move before seeing another leg up here, before at least breaking those Friday highs, the highs of the channel. So yeah, I like that. I mean, this support level down here would be your little internal support level where I would be interested in looking for a long, and then you could possibly even look to long the bottom of the channel again. Let's just say 25.36 to about like 25.25. And that's where the higher time frame value area low is. For some reason, when you zoom out onto the higher time frame, like let's go to the daily, let me throw that value area low on. And this is a high time frame range, so this is. And then if we go back to the 1 hour now, you can see that that value area low is going to be right at the bottom of the channel. So those are the two levels I'd be looking, 25.25 or 24.5 to 24. But this would actually be really nice if you continue to kind of grind down here, creating some bull divs, hit that, you can get above here. You know, that would be a nice little A, B, and then at least a C to come take out these highs and maybe backtest this higher channel, higher time frame channel. Yeah, and I would say coming to that 786 could even be nice. 2866. Okay, let's see. Yeah, we'll do shoot, there's a lot that's here. I will look at a couple more really quickly here, but I got to leave, guys, in 10 minutes. We're hitting the 1.236 on, what is this, Litecoin. And Litecoin is in this lower range that goes back to June of 2022. So it's definitely, this is like its new fair value for the past, 4 or 5 years is June of 2022. What I don't like is you're below your value area low of your range. You can see it was holding for the most part. You're losing it. It's not good that we're losing it with such aggression here to the downside. Now, say this is that ABC correction. A, B, C, and your C wave is generally a very volatile impulse to the downside. So we are seeing that. You are bouncing from your target of the 1.236. It's between the 1-to-1 and the 1.236. It would have been nicer to hold the 1-to-1, to be honest. It would have been nicer to hold that. Now what I would want to see is a reclaim of this pitchfork right away. You need to get back inside the pitchfork, get back inside the value area low. If you cannot, you are going to continue down. And you're probably going to take out these lows. That's all that's left there is liquidity. Sitting at $40.32. So depending on what happens on LTC in the next week to 2 weeks is going to tell us everything we need to know. You can see, just like Cardano, or was that Say, just like Say, we lost the pitchfork. Pitchfork was holding as support here. You lose it on Thursday. You bearishly backtested on Friday. And so far, we're kind of rejecting, but this looks like a corrective rejection. So you want to get back inside that pitchfork ASAP. You cannot afford to stay outside of that pitchfork for too long. So a reclaim and a daily candle body close above 56.2 is what you want to see. Even better would be a reclaim of the value area low, which is going to be at 58.8, let's say. That's what you truly want to see, is a reclaim of those two. But what was holding as support locally last week is now flipped to resistance this week. Not good to see. Just not good to see. No real bull divs on Market Cipher B, but NAMI has some pretty nice bull divs. Unfortunately, your money flow is leaving out of the asset. So until this starts to round up here, once it starts to round up, that's when I'll start, because we do have multiple drives of bull div here. Once this starts to round out, that's when you could start to really look for some good longs on LTC. And if you don't, if you continue to reject and don't hold your local golden pocket in your daily level, then you're probably going to come to $40 and take out those $40 lows. So yeah, look around, like your daily's at 50.69. Golden pocket's not quite there. Yeah, I mean, this is more of a flat channel like Solana's. So I'd be looking at that corrective channel here. I would be looking for a grind within this channel until you get to the daily level. Like if we can grind for another day or two in here, hit the daily level at the bottom of the channel, that could be your A, B, And then you could get a push up, hopefully take out these highs and get back inside the pitchfork. Let's go to AVAX. Avalanche is rejecting its golden pocket, unfortunately. See that golden pocket rejection pulled from your last hourly high to your low, or last week's high to low. And it's also a very important support resistance flip, SR flip level. Support, 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 now acting as resistance. That is not, oops, not good to see. It's also the back test of your value area low. You're rejecting your value area low. You can see we lost the value area low, bounced from your support resistance, your 1-to-1 Fibonacci extinction, rejected that value area low on a bearish backtest, and that's when you got your waterfall. That, it just sucks. And you're SFPing the lows, the all-time lows here. So it's crazy how bearish crypto is right now. A lot of altcoins are at literally all-time lows. Like, this is just nuts to me. Coming down to $7 is your next support level here. $6.92, $7. Yeah, guys, I'm going to check Bitcoin really quickly, and then I got to get out of here. Please hit the like button on your way out. I will be live again on Thursday and Friday. Keep an eye out in the Telegram. I'll keep you guys updated in the Telegram if I take any trades. Right now, I'm not too interested in altcoins until Bitcoin starts to make a move. But Bitcoin, looking at those ranges. So I'm looking at the highs and lows of this little mini range. And then I'm looking at the 786, the daily level, the point of control, and the bottom of the pitchfork. 63.1 to about 62.6. Above us, that naked daily point of control at the top of the pitchfork band. Naked daily point of control is at $73,500. It's at the top of the pitchfork band. That could be a little rejection area as well. But if you're bullish on some of the projects, now is the time to start looking. You know, start DCAing, start looking. I would wait for a little bit more confirmation, but look at this. Another thing, guys. Volume decreasing overall on this move to the upside, meaning it's more corrective. So yes, we could see another leg up in the correction, but then I would expect new lows. It does look like a wave 4 corrective move. And remember, it's meant to last 1 to 3 weeks, 1 to 4 weeks. This one lasted 1 week. So we want to see some symmetry there. We're going on, I think, 5 days now. Let's see here. Yeah, pretty much 5 days into it. So a couple more days would be nice to see, you know, maybe another half a day of a grind down here, and then a couple days of a move up. Maybe even a week of a move up before dropping. All right. Thank you guys all so much for being here. I appreciate y'all. Thank you, mods, for always doing such a great job modding. Guys, if I didn't get to your stuff today, I promise I'll try to get to it in the next stream. I'm running out of time here. So appreciate y'all, and I will see you next time.